Hello, future investors. Today, the topic of our video is cryptocurrency trading. In the world of cryptocurrency trading, there are several main ways to make money: spot trading, futures, and options. Each of them has its own characteristics and advantages, so let's figure out what's what. Let's start with spot trading. This is the simplest and most straightforward option. You buy cryptocurrency on the exchange at the current price and wait for it to grow in order to sell it at a higher price. It sounds logical, but there is a nuance. In order to make money, the coin's rate must necessarily go up. If the market falls, you risk losing money. Therefore, spot trading is more suitable for long-term investments rather than for quick money. Advantages: immediate ownership. With spot trading, you immediately receive ownership of the cryptocurrency, which allows you to instantly use or sell the asset. Simplicity. Spot trading is intuitive and suitable for both beginners and experienced traders. No complex analysis or strategy required. No leverage. This reduces the risk of liquidation of the position since you are not using borrowed funds. Disadvantages: volatility. Cryptocurrencies are known for their high volatility, which can lead to significant losses. Requires the full amount. To buy assets, the full amount is required, which can limit the trader's options. Now, futures. These are contracts to buy or sell cryptocurrency in the future at a pre-agreed price. The trick is that you can make money on both the rise and fall of the rate. If you think the coin will go up in price, you buy a futures contract. If the opposite, you sell. The difference between the opening and closing prices of the position will be your profit. Sounds cool, but be careful. Futures provide a lot of leverage, which means the risks are also high. Pros: possibility of profiting on a fall. You can profit on both rising and falling prices, which gives you more trading opportunities. Use of leverage. This allows you to open positions larger than your capital, which can significantly increase your profits. Cons: high risk. Using leverage also increases the risk of losses. An incorrect forecast can lead to significant losses. Complexity. Futures trading requires a deeper understanding of the market and strategies, which can be difficult for beginners. Finally, options. These are contracts that give the right, but not the obligation, to buy or sell cryptocurrency in the future at a fixed price. The buyer of the option pays the seller a premium for this right. If the price goes in the right direction, the option can be sold or exercised profitably. If not, losses are limited to the premium. Options allow you to profit from both rising and falling markets, but require a deep understanding of pricing. Advantages: flexibility. Options give you the right, but not the obligation, to buy or sell an asset, which limits your risk to the premium paid for the option. Variety of strategies. Options can be used for a variety of strategies, including hedging and speculating on price movements. Disadvantages: complexity. Options require a significant understanding of pricing in different strategies, which can be difficult for beginners. Premium. If the market moves against you, you only lose the premium you paid, but this can be a significant amount, especially if you trade frequently. So the choice of trading method depends on your experience, goals, and risk appetite. Spot trading is suitable for beginners, futures for more experienced traders, and options for those who want to use complex strategies. So choose spot for long-term investments, futures for active trading, options for advanced traders. The main thing is to remember about the risks and manage them wisely. Good luck in trading.